Hello, traders. Gary Wagner here. Approximately 11 a.m. in Honolulu, Hawaii, the 15th day of July, Friday, and this is the Daily Report Weekend Review for Gold. And what a week we have had. Nice finish on the week, currently up $5.30. That's due to normal trading. A weakening U.S. dollar is adding another $1.10 to that. So our net total change is up around 6,640 in the market. As you can see, currently trading 1593.15. In today's report, of course, we'll talk about the trade that we entered at the beginning of the week. We've got nice profits, but I personally believe that this market should continue to trade higher through next week. So we'll talk about a couple of options today and Monday, and also review the week and take a look at our interim goals, all here on today's daily report. Traders, we have a lot to cover, so let's get right to the board. I want to start with our shorter term charts. I'm going to go over here to the left-hand corner. This is a Henkin format, Japanese average, 360-minute chart. If you recall from yesterday's conversation, we talked about the fact that when we looked at the marketplace itself, and let me go ahead and divide the days up so you can see right where we were at. This is the 14th, and this is what we were witnessing between these two arrows. I had mentioned that although on some occasions, and typically a doji and a doji-like, these small-bodied candles can absolutely represent a turning point in the market. In other words, a pivot point in which you'll see a retracement. I said that in the case of gold, in many circumstances, what you get is a period of time in which the market simply consolidates prior to moving up. And typically in a huge bull run, and traders, if you take a look at the activity over these last couple of weeks, this has been the greatest bull run we've had since November of 2009. You can see that in these 2 points, you had that same type of activity. In other words, a consolidation prior to it moving back up. Unlike this type of a pivot point that you see, for example, on the bottom where you get that perfect doji at the bottom and then you get these small-bodied candles but the absence of tails. Now, when we take a look at the final activity of the week and the final activity of today's trading day, you can see that has gone back into the type of candle, the type of mode that I typically look for in an uptrend, which is a solid size body, the absence of tails. Very, very similar to what we're getting down here where the market was really taking off. You can see that as that market took off, it did lose a little bit of steam right in here. Now recognize that this is right at that new high. This is 1577. So this is, the former high. So it formed a base at the former high before moving back to the upside. This is that same chart. It's a 360-minute chart, but this, of course, is in candlestick format. It appears differently because you're seeing true price activity, and I think that you can see quite clearly and easily. We simply draw a line from this top. We've already got that in there, and that's at 1577, and it's quite clear in terms of the activity that it was forming a base in this area, simply put, and now is moving off the base and, of course, is trading at a new record contract high and record high today on today's close. Now, very similar activity when we look at the 720-minute chart. Realize on a 720-minute chart, each candle, there are 2 candles per day. That's the easiest way to look at it. Now, you do have some activity in the MACD, moving average convergence, divergence, of course, that shows that it is beginning to diverge, meaning that it is coming closer together right in here. You can see it's hooked, but it certainly hasn't done anything in terms of crossing. 1, 2, when we start to look at some of the oscillators here, your RSI, your stochastics, Williams percent R, they're all going to give you a signal that tells you that the market is overbought. But realize, in a highly trending market, it will continue to be oversold or overbought depending on the direction of the market. Now, in this 720, what you're seeing, of course, is the activity has lightened up. There is a little bit of a tail that comes in here, but I genuinely do not have some real concern right now. What I am looking at really is this beautiful, beautiful trend that started, that developed, and is absolutely continuing at this point in time. Now, the real tell of the tape is I've converted it again back to a candlestick chart. And when you take a look at the candlestick chart itself, you can see that the pattern that's formed on a half daily chart is definitely an engulfing bullish. It's an engulfing bullish way up at the top. But if you take a look at this activity, you can see that for the last half of this session, of course, this is the first part of the session, this is the second part, you can see that it is overtaken everything and it is absolutely closed on a new record high today. Marvelous, marvelous day in the market. That takes us to our daily chart. We're going to look at it both ways today, Henkin as well as standard candlestick. This is the Henkin, this is the daily chart, and traders, this is as good as it gets. This is as good as it gets, because if you take a look at the activity of 1, 2, 3, 4, this is the trading week this week, this is the trading week last week, you notice that on all of your candles there's an absolute absence of lower tails. That tells you that that trend is impeccably strong. Take a look at any other time recently when the market's gone up, and you can see that you do get these tails kind of periodically poking their head, even if the market's going to go higher. And as that market builds in steam, you lose these tails. Same as down here. Same as in here. Even though the market rallied strongly, if you notice, it's a different type of rally when you look at these lower tails here and the size of the bodies. Compare that to this current print, and I can tell you this, traders, in all my years of trading, I've seen this before in gold, and I saw this back during some of the rallies, but I have not seen this type of trading activity in years. It's absolutely magnificent. There's no doubt about it. And when we convert it to a standard candlestick, and this is where the Henkin really comes in and shows you a different view of the market, you can see the true highs and lows of the days and the ranges. Now, we are closing up near the highs. There's no doubt about it. We've had nothing but up days. In other words, the green candles mean it opens and closes higher. We've had nothing but up days for the better part of this month. Absolutely. It is a phenomenal market. Now, if you take a look at the market in this way, this, of course, is a cash market continuous. So it closes here. The fix, of course, is going to be the open here. They come down and make a low, and make a sizable low, as you can see, testing about the 1575 area right in here. But at that point, you had bargain hunting come in the market, and it genuinely drew the market up, and it closes near the top. That is a hammer hangman. Typically in a market like this, if it wasn't gold, I'd be looking for a potential because of the hangman. But what we have seen time and time again in this market is this particular candle type, the umbrella candle. I am labeling it a hammer. It is hammering out another bottom in the market. And as incredible as it seems, I believe that to be true. It absolutely formed a base. It absolutely took out any kind of idea that this old price tag, call it, of 77 is something that it might come back down and test. You can see that it in fact came and tested it today, but to no avail. To no avail whatsoever. Now, traders, the real issue right now is going to be having the market formulate a base and move above $1,600. It's quite obvious. These $100 marks, $1,400, $1,500, $1,600, these are so critical and so psychologically important. We'll have to see. Now, it's flirted with different areas, but my belief is if we maintain the kind of fundamental news that we're getting this week, if they're still having difficulties, for example, next week with the debt ceiling in the United States, whether they raise it, how they're going to control this huge deficit, you're going to see this market dynamically break through 1600, and you'll see 1600 form a base as it moves to the mid 1650s. I'm looking at our first target, as I said, between 1608 and 1614. We'll see how it reacts there. We've got great profits in this particular trade, but I feel that this trade could give us a lot more traders. This has been Gary Wagner wishing you, as always, good trading. And we'll talk to you on Monday for another daily update and review. Bye-bye.
my window. many sights to see. And when I look in my window, so many different people to be, that it's strange